Hello guys, so this video is going to be an important lesson on fair value gaps and how to use them on the daily time frame. Okay, so ideally if you are bearish, and normally as day traders the minimum time frame we should be looking at for buyers is the daily chart, right? So we use the daily, we use 1 hour confirmations, and then after 1 hour confirmation we can further confirm on 5 minutes or 15 minutes, right? So let's say we are bearish on the daily chart, price has pulled back to your daily fair value gap. Now the question is, at which particular point within the daily fair value gap should price reverse? Okay, I discovered this recently. I was studying price tirelessly, right? Trying to perfect my skills, and I found out something really beautiful. And I know that we can time the specific level within the fair value gap on the daily chart where price will start to reverse from. Okay, so you can see that the 75 has been bearish for quite some time. You can see that daily fair value gaps are being respected. You can see there was this daily FVG respected, price sold from it. Another daily FVG respected, price sold from it. Another daily fair value gap, price respected it and sold from it. And the question I ask is, which specific point within the fair value gap should price reverse from? We are going to learn that today. Okay, so first of all, you need a tool. You can use this gun tool so that we can divide the fair value gap into quadrants. Okay, so with the gun tool you can just turn all these levels off, and then upper here just turn the 0, 1, 25, 0.5, and then 75 on. Okay, so we get all the quadrants. So I'll just be using the 0.25, 0.5, and then 1 and then 0 levels. Okay, so I'll be using this to grade the fair value gap. Okay, if you don't have this, you can use the Fibonacci tool and just modify the levels to get these levels. Okay, so we are going to look into all of these 3 fair value gaps, and we are going to learn how price reverse from specific points. Okay, but before we go to the lower time frame, we are going to grade the fair value gap. So fair value gap low to high. Okay, fair value gap low to high. We are going to do that for all of them, and then I'll show you specific points and specific levels on the 1 hour chart that price reverse from. Okay, so if price pulls back to the fair value gap, we want to see at least price going to 25% of the fair. It may not always get to 50%, but at least we want to see price going to 25%, right? At least we want to see price going to 25, like 80 to 90% of the time price will go to at least 25% of the daily fair value gap in terms of the daily fair value gap. Okay, for my studies. So now, how can we know the specific levels? So now, after we divide our daily fair value gap into quadrants and know 25 to 50% of the gap, we want to go to the 1 hour charts. Okay, and on the 1 hour charts, we are going to look for order blocks, wicks, and yeah, basically order blocks and wicks that has not been mitigated. Okay, those levels should be fresh levels, fresh zones. So these order blocks or order blocks or wicks should lie at least above 25% of the daily fair value gap. Okay, so if you go to 1 hour chart, you're going to look for order blocks and wicks that are above 25% of the range that has not been mitigated. Okay, and we are going to note it and mark it in time, and we are going to see how price reacted from it. Now, it's not just going to be any level, but it should be a level that price moved away nicely from. Okay, so those 1 hour levels you're going to look at should be levels that price moved nicely away from. So if you find a 1 hour order block above 25%, you want to see a nice move away, and we don't want to see mitigation prior to the move away. We want fresh zones. Okay, good. So let's go to the 1 hour chart and mark all the levels, and we will see how price came to those specific levels and reversed. So let me go to the 1 hour chart here. Okay, so this is the 1 hour chart. So the first daily fair value gap we marked, the high is here, the low is here, and this 25 and then 50%, right? Okay. So let's zoom it and let's look for 1 hour levels above 25% of the daily fair value gap that are fresh and has not been mitigated. So above 25% of the range, the first level we see is this bearish order block. But we can see it was mitigated by this candle before going down. As I say, we want a fresh zone that has not been mitigated. So this order block is not valid. Okay, we will ignore it. There is another order block here, but as you can see, it mitigated it here, here, here before moving away. Not a good order block. Okay. So let's keep looking into the daily fair value gap. The next thing we see is this wick. Okay, so this is a hidden base. Okay, if you see a wick down, a wick up, and a nice move away, that level is an important level. It's called a hidden base. Now, this hidden base, if you go to lower time frame, like 15 minutes or 30 minutes, it's going to be an order block. Okay, so that's the first level I see that has not been mitigated. You can see that we didn't come to those wick. Okay, so it's a fresh zone that I'm going to mark and extend it. Now, the next level I see is also this wick, this big wick before the move. Now, nice move away from it. We can see that price didn't come to test that wick. Okay, now this wick, if you go to lower time frame, once again, it's going to be an order block. I just don't want to go down 15 to make the video long, but in your personal backtest, when you mark these wicks and go to lower time frame, you're going to see that those levels are order blocks. Okay, so that's also a nice level. You can see price didn't come to retest it, and it has a fair value gap. This level too, price move away, we didn't come and retest it. It also have a fair value gap. So those are the only fresh zones we have within the daily fair value gap. Now this is above the fair value gap, the daily fair value gap, but this is within. But you're going to extend both because you can see the tip of that wick is what is making the daily fair value gap high. So both are important levels. So all these levels are just going to be used as liquidity. Price is just going to react, just give small reaction from it and still move up towards those levels. Now let's extend the levels all the way to the right side, and you're going to see how price reverse from those levels. Okay, and as I said, these levels, even though price may react from it, but it's just going to be a reaction, and it's going to be liquidated. The real move away is going to take place from the fresh untested zones. So boom, the first zone, consider rejection, and we also tipped into the zone up there, and then aggressive move. That's the very turning point of the whole move away from the daily fair value gap. As I said, these levels, they are not fresh. So even though it's going to react, it's just going to give small reaction, and price will still be coming up. And later it's going to be used as liquidity because it's not fresh. Okay, so it's going to be used as liquidity for price to tap into the fresh zones. So apart from these other blocks, we didn't have any other block, but we have these wicks. And as I said, these wicks are other blocks on the lower time frame. One is the hidden base, and then this is a long wick like this. If you go to lower time frame, it's gonna be an order block. Perfect reaction. Okay, perfect reaction. Now let's go to the next daily fair value gap I marked here, and we're looking into it on the 1 hour time frame to look for 1 hour fresh levels that were not tested. So above 25%, we start looking for our zones. So we have this bearish order block above 25% of the zone, but it was tested. Let's see that order block. that other block was mitigated here, so it is not a fresh zone, so we are not going to use it. This other block was also retested by this wick and then this wick and then here before moving, so this is also not a fresh zone. Now above here, the next other block we see is this big candle, and then we have this wick as well. Okay, and as I said, wicks like that on a lower time frame is going to be an order block. So now, since all these other blocks have been mitigated, price is going to use those other blocks as what? Liquidity to tap into the fresh zones. Let's extend price all the way. And we see where perfect for the first zone was tapped. Nice and perfect reaction. Price didn't come. Okay, price came to the last zone as well. And then it gave the massive sell-off all the way to the downside. Okay. So when it tapped the fresh zone, since we've refined the daily fair value gap all the way to the 1 hour PDRAs, we can confirm our entries on the 5 minutes. Even if price gives you a small reaction on the 5 minutes, it's going to be a lot of profit, a lot of move. Let's say you confirm this move on the 5 minutes and took your entry somewhere here with stop loss here. This move is a big move, trust me. It's a big move. So the second time it came to test it, another nice aggressive move. If you confirm on the 5 minutes, you're going to get a lot of profit. And then finally it came to the last zone. So this zone was used 2 times, so it has become weak. It went to the last untested zone for the aggressive move to the downside. Okay, on the 5 minutes, if you took confirmation, that's a big profit that you could have made. Now let's check the last zone that I have here. Okay, another daily fair value gap, right? We are going to look above 25% order blocks that are fresh and untested. Okay, above 25%, the first order block I see is this, very fresh, not tested. You can see we didn't test it at all. These 2 up close candles are your order block. Okay, we didn't test it. Okay, so I'm gonna mark those 2 up close candles. I'll mark from the body to body. You can mark from body to high as well. And let's extend it all the way to the right. Let's see if there is any other zone that was not tested. We have this wick here, but that wick was tested on this candle, so it is not fresh. The only fresh zone we have is this order block, and it has a very nice fair value gap as well. Now let's extend it all the way to the right, exactly where price reversed from. Okay, now this order block is resting below 25% of the fair value gap. Price is going to use it as well, liquidity. Okay, and aside it resting below 25, it was also tested here before going down, so it is not fresh. So this is the fresh zone resting above 25% and nice fair value gap with it. So that's a nice area and then perfect reaction. When it comes to it for the first time, I can confirm your entry on the 5 minutes. Whatever profit you get out. You can get out your on your first initial profit at this break order block here. Price taps back into it. You confirm M5 again. You take your sales. Since you are waiting for this to be broken, you take your profit again there, and we respect this, and then we bounce back again into it. You confirm bearish again on the 5 minutes. You take your sell. Take profit at that order block, and once we break this order block, then you can look for more sells all the way down. Okay. Now you can also do aggressive entries, and yeah, because we refine the zone all the way to the 1 hour, so you can take this entry from the 50% of the level, the whole level, place stop loss above, and just ride it. Okay, ride it. Just set your stop loss and take profit for like 1 to 3, 1 to 4, or whatever. Just leave the chart and come back the next day, and you see massive profit. The same thing here for this one. We had 2 fresh zones, so you're gonna set 2 limits. Okay, 2 limits. First one, 50% of the zone, stop loss above. We target 1 to whatever RR you want to target. This one gave a very massive risk to reward, like 50% of the zone entry, stop loss above. This is 5R already. If you target even 10R price, would have given you times 10. And you take your profit. Now, the second zone gets tapped. Another aggressive entry can be taken. You don't always need confirmation. Stop loss above. You can target one. This is a daily fair value gap, and we are looking for daily bearish continuation. You can take a lot of profit. 1:5, 1:4. Okay, whatever profit targets you are comfort holding to get, right? So if you have two zones, you have to set limit on both zones. Gold price can easily wake you out and then tap into the second one. But each zone that you get entry at least targets some good risk to reward, like times 5, times 6, whatever. Okay, and make sure you're taking the entry from 50% of the zone. Let's look at this. This one too, we had two zones, so both of the zones were tapped. Okay, but these zones were very, very close to each other. So in this case, what you can do is just set your entry at 50% of the first zone, but place your stop loss at the second zone. Okay, at the second zone, and write it. Take 1:5, 1:6, 1:10, whatever, because this a daily fair value gap and we are bearish. You are expecting price to sell all the way to the daily swing low. Okay, if you get the entry, that's what you are expecting. The same here. If you get the entry here and here, you are expecting price to sell all the way to the daily swing low. Okay, because we are bearish on the daily chart. The same here. If you get entry from that fair value gap, which has been refined to that 1 hour level, and you can hold it all the way to the daily swing low. But of course, you need to take partials and then you hold the rest. Okay, and the same thing, can take partials, and this one 10R is even enough. You don't have to hold all the way down here. 10R is a lot. Okay, so a second zone gets tapped, can take all the way down here. Okay, all the way to here. Okay, very beautiful. So yesterday I shared a trade on VIS10, right? And it was beautiful trade. Okay, you all saw that setup. Let me quickly show you this trade that we all made big profit from. It was based on this simple idea. Based on this simple idea that I'm showing you. As soon as I discovered that I discovered this, I decided to use it on this. Okay, and you can see we went aggressive entry. Yeah, that was an aggressive entry for the signal that I shared. So let's look at how it formed. Let's go to VIS10, right? Yeah, and I'll show you. Let's go to VIS10. Okay, let me delete everything, go to the daily charts, and I'll show you the reason why I sent that buy signal with aggressive entry and we made massive profit. So here the daily has broken bullish here. Okay, daily has broken bullish after price manipulated this low, and we have a daily fair value gap. You can see this huge fair value gap. So we are going to grade the fair value gap into quadrants, and we are going to go on the 1 hour time frame to look for fresh zones that lie below 25% of the fair value gap. Okay, so let's go to the 1 hour chart. So on the 1 hour chart, we are going to start looking for order blocks that are fresh and not tested. The only order block that I see is this order block. So these 3 consecutive down close candles, they are your entire order block. So that's the only order block I see. I don't see any order block here. So I'm going to mark that. Okay, and we'll be expecting that price would reverse exactly from that point. Okay, so first tap here, beautiful buy. Second tap, nice buy. So all these rejections or these buys that took place on the 1 hour, if you confirm 5 minutes entry here, this can give you like 10R. Here, if you confirm another 5 minutes entry from it, this can give you like 5R. Another 5 minutes confirmation can give you a lot. Okay, so what I did is when I discovered the whole concept, I decided to use it on VIS10 when price was at this level here. Okay, And I realized that, okay, we are here and price is still respecting this level, like 1, 2, 3. So why not just go aggressive? Because we are already forming trade drive within my zone. Trade drive is when we take liquidity one and then twice, making 3 lows consecutively in that direction. So that's a trade drive pattern. But already I have refined my daily fair value gap into a 1 hour order block. So why can't I take aggressive entry? And I shared the signal right at this point when price was at this point and stop loss was below here. Okay. And I gave a profit target of it was around this point. Okay. Yeah. And you can see massive buys towards the level. Beautiful trade. Beautiful, beautiful. So if you check the VIP group, exactly where I shared the signal, right? Here is the signal. Trade from that 1 hour POI, 1 hour bullish order block, which is fresh and it wasn't tested. The move away was nice. We have fair value gaps prior to it. Fresh, and it is resting within our daily fair value gap. You can take aggressive entry. And it can also be confirming the 5 minutes. First tap, you can confirm 5 minutes and then boom. Second tap, you can confirm 5 minutes. You can get so many profits on any reaction that price is going to give just using the 5 minutes confirmation entry. So that was the setup yesterday. Very, very beautiful. Beautiful, right? Beautiful. So go back into your charts. Look for the daily fair value gaps, which are in line with the current structure or order flow, and look at grade it into quadrants. Go on the 1 hour chart, look for fresh zones, and look at how price reacted specifically from those levels and then reversed. Okay, it's gonna amaze you. It's going to amaze you. So as I said, you can take entry from 50% off the zone and place stop loss just below and write it. Okay, you can also use the 5 minutes to reconfirm. Anytime we get into it, you can reconfirm on an entry on the 5 minutes. Here, if I go on the 5 minutes, you're going to see so many nice entries here. Let me quickly check the 5 minutes. And you see that anytime we tap into the zone, there was a nice bullish entries that were given for massive profit. The 5 minutes can give you massive profit. So the 5 minutes broke structure above this high. Okay. And that was a 5 minutes breaker block, which is paired with fair value gaps here. So you could have taken your entry from the fair value gap or the breaker 50%, place your stop loss below the swing low, and then massive profit on the 5 minutes. Okay. Massive profit on the 5 minutes. Beautiful profits. Okay. And then once again, price comes back and tap into the zone. You're going to look for 5 minutes market structure shift. Here, the market structure shift was quite tricky, but let's use this. So that was the last swing high before price tap into it. So as we close above, it becomes a breaker. You buy from 50% of it. And you can place stop loss below this order block and catch some nice 2.3 hour. Okay. Now price taps into it again. You get nice 5 minutes market structure shift here above this high. You have your 5 minutes fair value gap, big fair value gap. Okay, very nice fair value gap. Can take your entry from that 5 minutes fair value gap. Place stop loss below the 5 minute swing lows. And another massive profit. Okay. And this is the trade that I shared, the signal that I shared. But it was an aggressive entry on the 1 hour chart. Okay. On the 1 hour chart. So sometimes price can tap into the zone multiple times before it moves away. But yeah, it will respect it nicely. And massive trade. Okay. Massive trade. So yeah, go ahead and back test. And if you have any questions, put it into the VIP discussion and I'll be glad to answer you. All the best, guys.